does the barge system hold? Well, this is going to be really interesting as to what the U.S. can or cannot do. World veg oil, I mean, we've discussed that. I think if the oil yields are smaller in the U.S. soy crop, and let's say, the biodiesel thing, if heating oil pops in the U.S. or we see a bounce there, which in theory you could, the bean oil and the veg oil situation gets actually quite interesting, and Tom spoke of that, and I have a tendency to agree. It's going to be the meal show and slowly gravitate into the oil show in late Q1 and into Q2 of calendar year 2010. Probably prefer to play that from an oil share on the board type punt in this environment, but that's going to be one to watch. Corn, it's lacking. For me, it's lacking a theme. I think you have to be cognizant thereof of how much cash is available. Probably your biggest risk is going to be from basis, from premiums. So if you don't have any cash flowing, obviously, premiums will go higher. That to me would be the biggest risk. But again, unless you have some production threat, it's hard for me to get too excited here in early September about the corn market. I think your Nove Dees soy corn spread, I think that can blow out to 3.5. If we're right on meal and soy gets going, you could blow that spread out to record levels, which is kind of interesting. This is the balance sheet. This is, I think there's the one thing to point out on this. This was done right after the August WASDE. I released it to clients. So this back in August. I was almost at 2 billion bushels. And that was basis of what seems to be today a very conservative 157 bushel an acre yield. That's very conservative yield estimate probably today. I have a huge issue with the feed number. We'll get the quarterly stocks report on the 30th of September, but I have not seen any signs of U.S. feed life to support a number much greater or actually less than this last year. Ethanol, we'll see. Exports, I think world demand or world trade is going to be more regionalized. You have bigger crops coming out of Thailand, and you have a lot of feed wheat available. So corn's going to have some competition. I think that's the other thing you have to remember. Corn's got more competition for the mouth of the animal in terms of feed ingredient substitution. With soy, by and large, there is no substitute. Not in volume. Not in volume. And I think, I always remind myself of that. You don't have it. And when you've got a China in the mix, I think that's why it is such. I mean, that is the one commodity that's she's just naturally bullish. She's got a natural bullish inclination to her, and that's something to be very respectful when it comes to the soy complex, or certainly soy and meal. Wheat, yeah, upward price threats. I mean, talk about a stretch. That's the last point. Black Sea political government meltdown. Okay, that I was really kind of trying to find something that would spark the world wheat market, and I simply I can't find it. So we shall see, because I don't think really any of those are going to happen. Maybe India imports some wheat, but that's okay, great, please take some. U.S. exports are almost 50% behind last year's pace. Okay, the U.S. is going to have a lot of wheat. Well, actually, it's 45% behind last year's pace on the export side, okay? And now you're moving into a period where all your fobbing capacity is going to be corn and soybeans. Wheat just, go get it out of Europe, go get it out of the Black Sea. This is just a quick look at commodity investment, just the sheer money since '85. This is here. What it looks like might be changing, given some of the regulations with the ETF, with the exchange-traded funds, and the size of positions and exemptions. You know, we're still sorting through that, or the CFTC is still sorting through that. That will remain a price influence, and again, fear and confusion. Don't underestimate, that has not left. That is a theme. Fear and confusion remains. Okay, prove it to me, remains. You know, and as you look at that, the market, you know, remember these things. Ag legislative forecast. You know, the big issue facing the U.S. livestock industry is animal ID, animal welfare. I've got friends that are lobbyists for the American Farm Bureau, and their biggest issue is dealing with the Humane Society and the amount of money that they're spending, you know, dealing with the Humane Society, because it's, you know, let's treat chickens with humanity because they've got feelings, and you know, don't put them in cages and all these like kumbaya, you know, warm fuzzy, you know, whatever. I don't get it, but that's cool. But that's a very real threat, and that's why I do think ultimately, you know, if I'm going to be in the livestock sector, or let me say, someone gave me $50 million and said, you know, go invest in the livestock sector somewhere, it would not be the United States, and it probably wouldn't be Russia. Only because, you know, I think the Russian government would come take my, you know, my poultry plant or something. But when it comes to that, I do think that the U.S. is doing a very good job of exporting its feed sector in this environment right now. This is just a little bit about Conciliagra. This is an example of the crib sheet that I send out every morning. It's pretty blunt. It's pretty straightforward in terms of thoughts on the market, what I think is driving it. If you'd like to receive it for a month or so, send me an email and we'll get you hooked up. And I will leave it at that because I know I'm well over my time, and certainly if you have any questions, I'll let Adele kind of.
Just one question. Yes, yes.
If you see the ratio 3.5 to 1
Mm-hmm.
on the NOV-D spread,
Mm-hmm.
wheat's, we're going to lose tons of wheat acres.
Good.
Bean acres are going to go way up, and I think you're going to be oversold on your corn acres. I think corn's going to go down. As a U.S. farmer, I'm going to look to plant the lowest input crop that I can. So
Yeah,
that's just my opinion.
Yeah, no, let's put it, let's step back. This is NOV-9, D9, right? So those planting decisions, the back end of the curve doesn't look like that because the soy market's inverted, okay, which means the front end's higher than the back end. The corn market's almost in a full carry. So actually your ratios, if you look NOV-10, D10, which is what you'd be looking at, actually those ratios do line up. This is more of a front end, you know, that type thing. But I think it does go to show that, you know what, I don't think the U.S., if the U.S. never planted soft-red wheat again, I don't think it would hurt the world. Other than like the domestic millers that need a little bit of soft-red wheat, great, but guess what? You've got a thing called the breadbasket, which is the original, you know, the Black Sea. Okay, fine, you know, we're spring wheat, especially if we get the drought resistance and that sort of thing. If you see soy production, it's been moving into in Minnesota and North Dakota and that. Yeah, sure, and definitely west. I'm not sure that the U.S. needs to be producing the wheat that it is right now. Because guess what? The world doesn't want it. That's what it's telling us. Well, the world's saying, you know what, I'll go buy it from somewhere else. So it's responding to those things. And the world's saying, I want soybeans yesterday. That's what the world's saying right now.
Okay.
Right.
Thank you, Emily.
Thanks.
Yes. Okay. We've got one more question.
It's not a question.
I'll be at dinner tonight, by the way.
I just wonder, because right now we are talking about an influx of the capital for the next year from the U.S. government. And I think you